In this video, I dive into a topic that sparks heated debates among homeowners and financial gurus alike. Is your primary residence truly an investment, or is it just a place to call home? After this video, you'll be able to distinguish the difference. Now, on the one side of the argument, we have those who firmly believe that purchasing a primary residence is a savvy investment strategy. The rationale? Well, let's unpack it. First and foremost, home ownership allows you to build equity in an appreciating asset. When you make bond repayments, you're essentially investing in yourself rather than lining a landlord's pockets with rent money. So, indeed, the potential for long term appreciation in the housing market can yield some significant returns. Historically, real estate has proven to be a relatively stable investment, with property values typically increasing over time. But what do these returns look like in South Africa? I get to this at the end of this video. Moreover, home ownership offers tax advantages, such as deductions for bond interest, property taxes, and they can help you offset the costs of ownership. But now, before you rush off and sign on the dotted line, let's also consider the opposing viewpoint. Now, critics argue that treating your primary residence solely as an investment overlooks the many costs and risks associated with home ownership. Unlike other investments, real estate requires ongoing upkeep and maintenance, and that can eat into your potential returns. Now, let's not forget about the risk of market downturns, such as COVID, as well as the 2008 financial crisis. Furthermore, tying up a significant portion of your wealth in a single illiquid asset can limit your financial flexibility and diversification. Now, isn't the first rule of investing diversifying your portfolio? And the second is to always follow rule number one. So, by allocating your resources across various assets, such as stocks, bonds, and other vehicles, you can reduce your exposure to any one market. So, where does that leave us? Is your primary residence an investment or is it not? The answer, much to your surprise, well, it depends. So, to illustrate this point, let's consider the historical increase of property in South Africa. On tradingeconomics.com, we find insight into the property value increases between the years 2017 and 2023. The highest increase in prices happened in March of 2021, with 8.6%. The lowest recorded in September of 2019 at 1.5%, and the median increase over this period was 5.05%. Assuming you purchase a house for 1 million rand at an 11.75% interest rate with no deposit, you also opt to pay the house off on the full 20-year term with no additional payments either via lump sum or recurring. The property will cost you 10,837 Rand a month, and the total amount paid back will be 2.6 million over the 20-year term. So let's assume all three options of the house price increases mentioned above. So what I want to show you is what the house will be worth if your property increase is 1.5%, the median of 5.05%, as well as the 8.6. Now remember, these figures do not include your maintenance, rates and taxes, levies, as well as insurance. To have the most accurate breakdown, you have to include them in your calculations. Now, as you can see on the calculation, if the property increase over the term is 1.5%, your house will only be estimated at a value of 1.3 million after the 20 years. If we consider the median, which is 5.05%, the value of your property is just shy of 2.7 million rand. And on 8.6%, it is estimated at 5.2 million rand. Now, as you can see, if your property's increase over the term is less than 5%, we're looking at a relatively grim picture considering your total repayments over the 20-year term. Anything over 5%, it could swing things a little bit more in your favor. However, the cost of maintaining that property will also erode your returns and needs to be considered, as well as the inflationary effect over the 20 years. Ultimately, whether your primary investment is considered an investment depends on your individual circumstances, your goals, priorities, and many variables like the area that you bought the property in, the interest rates approved by the bank, and your repayment strategy. Now, for some, the emotional and intangible benefits of home ownership outweigh the financial considerations. For others, renting or alternative investment strategies may be more suitable. Remember that a home is more than just an investment. It is a place to make memories, find comfort, and create a sense of belonging. But when it comes to your finances, it is essential to weigh the pros and the cons carefully and make informed decisions that align with your long term objectives. Remember to consult with a professional before making any decision. Now, if you find yourself struggling with debt and you can't seem to see the light at the end of the tunnel, you have to watch this next video.